Okay, so the financial markets are pissed. So I'm going to tell you exactly why the market is crashing. I'm going to tell you how you can make money on it. So let's talk about it. This is the Hey Ed YouTube channel. I am your host, moderator, and all-around nice guy, Eric Anderson. I'm not a financial advisor, so do not construe anything that I mention in any of my videos as financial advice. Always do your own research before doing anything with your money. And boy, I wasn't planning on doing this video, but I've got to do it because something really dramatic is going on here. Now, I know that YouTube audiences have very short attention spans, and you usually don't watch for more than 2 or 3 minutes. So I'm not going to make this a really long, complicated explanation. I'm going to get right to the point, okay? Now, I had spent several days putting together a presentation for you about what's going on in the world and things for you to worry about that are not really being talked about. I wanted to talk to you about all these governments that are collapsing, big governments like Germany, and France, and Canada. They're collapsing. So what does that mean when governments collapse? Well, it doesn't mean the governments go away. That means the leadership is gone, and usually the day-to-day operations of the company get turned over to some kind of interim, manager, for the day-to-day stuff. But the governments, are basically, impotent, and that leads to chaos and a lot of uncertainty. I also want to talk to you about the global bond markets and how, bond markets are starting to collapse worldwide. I was going to spend a lot of time talking to you about what's going on in China and how that's going to affect us. But let's talk about what happened yesterday. Now, as I'm recording this, it is Thursday, December 19th, and yesterday we had a disastrous day in the markets. Just to remind you, let's take a look at what happened yesterday. Okay, so yesterday the market was down 1,100 points. And now today, look what it did. The market tried to have a little bit of a bounce, but it failed. So why did the market crash yesterday? It's because reality is starting to rear its ugly head. The reason why the market sold off yesterday is because Jerome Powell made some comments about interest rates going forward. And he said that he expects not to do as many interest rates next year as this year. Again, I'm not going to go over his entire speech. I'm just going to try to summarize it for you, okay? He spent a lot of time patting himself on the back about how they avoided this and the economy is good because of him. But of course, we all know that is all a lie. The government has been lying to you all this time. And anybody who does any kind of grocery shopping or puts gas in their car, they know things are not good. They know that they've been lying to us about the unemployment rate. They've been lying to us. And the markets have been going up for an awful long time for no fundamental reasons. It's been going up because the Federal Reserve has been offering cheap money. This has all been a sugar high. This is all smoke and mirrors. But let's take a quick look at how inflated, asset classes have become. Okay, so this is just the 1 month chart on the market, but let's go back 3 months. Okay, and here's your top at 45,000. I'm looking at the Dow Jones Industrial, right? And see this little support here? Yesterday, it crashed through that support level at 43,000, just went straight through it. Next support is down here at this 41,600 area. But let's go back a little bit further. That's just the 3 month chart. Let's look at the 2 year chart. Okay, all of this move here from about the 32,000 level all the way up to the $45,000 level, this has all been nonsense. This has been artificial. This has been created. This is just a sugar high. So how far could this market go? Well, listen, there's a lot of exposure here. This market is on very thin ice. I could easily see a scenario where the market gets down to this 38,000 level. It could, under the right circumstances, get down to 32,000. So even though yesterday was a very ugly day in the market, that's just the beginning, potentially, right? This market has a lot further to go to the downside if the market actually wants to start trading on fundamentals. Now, whatever happens, it's not going to happen in a straight line. This has turned into what's called a trader's market. This is not going to be investors. Investors are going to be very frustrated for the near to medium term. Okay, you're going to see dramatic sell-offs followed by rip your face off rallies that destroy shorts. So for talented and disciplined traders, this is going to be a really fun market. They're going to make a lot of money. But for investors, just get kind of used to the idea that it's going to be wild here. And most people should not try to trade this market. Unless you have time to trade and you have the skills to trade, you should not try to trade. But for people out there who are traders, man, you guys are going to have a lot of fun next year. I know that I am because listen, all it took To make this market crater 1,100 points is for Jerome Powell just to say, is really just a few sentences where he said, you know what, chances are we're not going to do as many interest rate cuts next year as we had planned to. And that's all the market needed to hear. Why? Because that's the only reason why the market's been going up is the idea of cheap money. Wall Street likes cheap money. Now remember, why does the Federal Reserve cut interest rates? They cut interest rates in times of economic turmoil where they need to stimulate the economy. So just the idea that they're planning on cutting interest rates at all should have told you that they didn't think that the market was as strong as they said it was. So on the one hand, they paint the picture that the economy is great. We avoided all sorts of, bad stuff because we're so brilliant. So there's nothing to worry about. There's nothing, to see here. But then they're cutting interest rates. Well, which is it? Because you cut interest rates when times are bad in order to stimulate the economy, in order to make things better. If the economy was as strong as they said it was, they should be raising rates. So that tells you these people are lying to you. They know what the real economic situation is, but they want to take care of their buddies on Wall Street. This is all a game. So you can't believe these guys. You can't trust these guys. Now, I also want to throw this in. This might sound a little conspiratorial, but there's something to be said for the idea that there are a lot of very powerful factions out there who would do nothing more than to sabotage Trump's presidency. So on their way out the door, they want to create as much economic chaos as they can to stifle, his efforts. Okay, so again, let's cut to the chase. So what should we expect here short term? Well, I think there's more downside to come. But at some point pretty soon here, probably in the next 1 to 3 trading days, there's going to be a very impressive pushback rally. So people who are trying to short right here, they could get destroyed if they're not careful. This is just the way markets work, okay? The markets are not rational. The markets are made up of human beings, okay? And human beings are emotional creatures. That's why the market is never going to be rational. But if you know how the game is played and you have some good, trading skills and you're a disciplined person, you can make a lot of money. So I do expect a big pushback rally pretty soon here. I don't know from what level. It could be much lower, but at some point here soon, there is going to be a very impressive rally. All right, so let's talk for a hot second about how this affects the crypto industry, for example, because a lot of people right now have been following the news on Bitcoin and XRP and XLM, and they've been getting really excited about the short-term prospects for these coins. Particularly XRP. XRP has been particularly prominent out there, in internet circles. Well, at the moment, let's take a look at what Bitcoin and XRP, for example, have been doing the past couple of days. Okay, so as of this recording, Bitcoin is trading at 97.9, so it's under that magical $100,000 level, and XRP is trading at 228. Early yesterday morning, it was trading at like 260. So they've both taken nice little haircuts. Okay, so obviously Bitcoin and XRP, they have their own stories, right? They've been going up for their own, because of their own situations. But when you have such a dramatic downward move in the overall markets, like the stock market, just the gravitational pull will drag down the cryptos right along with it. There's just no avoiding it. If you think that the cryptos have nothing to do with the stock market, you're kidding yourself. All these financial markets are tied together. Because again, remember, this is all psychological. This is all emotional. My opinion here is that you should view the sell-off that is going on right now in Bitcoin and XRP and XLM. You should view this as a gift, okay? This is a chance for you to start acquiring these coins down here before it makes the next big push. This is a gift. Now, they might become a little bit more of a gift, before they turn around. But listen, it depends on what your time frame is, okay? If you think that Bitcoin is the future and that XRP is the future, you shouldn't be too worried about any short-term movements in these things because the potential on these coins are absolutely massive. Recently, I did a video telling you about my new grandson that was born, and recently I bought him a couple thousand shares of XRP as his college graduation money, right? And I'm going to put it on one of these, and I'm going to go visit them in a couple months in New York, and hopefully that little XRP position will cover his college education. So again, with these cryptos, it depends on what what your risk tolerance is and what your time frame is. If you think that at some point, for example, XRP is going to be at $5, $10, $100, $1,000, Well, then you should just view this little dip here that's taking place the past 24 hours as a good opportunity to start acquiring it at a little better price than it was yesterday. Now, this is a really good opportunity for me to reiterate the mantra on this channel. Reduce your exposure to your bank, put some of your money into gold and silver, and establish streams of passive recurring income. If you don't mind, could you support my channel and help me push this message out by hitting that like and subscribe button? And if I don't see you before Christmas, have a happy and safe Christmas. Ed Anderson, live from Minnesota, signing out.
Copy that.